Last week was marked by the release of US inflation data for June, which surprised investors, reading at 5.4% on an yearly basis. This was the biggest jump in consumer prices since 2008. However, unlike the reaction experienced in April, when the same indicator showed a spike of 4.8%, this time the markets shrugged the news aside, with the S&P 500 reaching a fresh all-time high the following day. This is the ActivTrades Weekly Outlook, where every Monday we analyze the economic calendar and identify key events, focusing on how they may impact the markets. Stay with us over the next few minutes while I look into how the week is likely to unfold. I will cover a range of topics, including the Royal Bank of Australia minutes, the ECB rate decision and policy statement, and we'll end with the UK Services PMI. On Tuesday, the Royal Bank of Australia will release the minutes of its latest meeting. This happens at a time when the Aussie has been losing ground, with the last 3 weeks marked by a decline of more than 2% in relation to the US dollar. Despite unemployment data released last week, which was positive, showing a drop in claims that exceeded expectations, and the improving situation in China, Australia's main trade partner, the Australian dollar remained under pressure due to falling risk appetite in global markets. The change in sentiment followed dovish comments from the chairman of the US Fed and an increase in virus cases, as well as new lockdowns in the Asia-Pacific region. In such a challenging scenario for the Australian dollar, which is perhaps the most risk-sensitive of all major currencies, the minutes of the central bank will be scrutinized by unsettled investors. The risk is mainly to the downside, as any hints of dovishness amongst officials could compound the pressure on the currency and lead to further losses. Traveling across the globe, we focus our attention on the European Central Bank and its rate decision and policy statement, which are scheduled for Thursday. These announcements will, as usual, be followed by a press conference by the President, Christine Lagarde. The euro showed some weakness last week, as inflation data pointed at a deceleration in June comparatively to May, reading at only 1.9%. The single currency has also been weighed down by a dovish forward guidance from the ECB, which happens at a time when other central banks, such as the Fed and BOE, for example, have switched to a more hawkish stance. It is pretty much guaranteed that there will be no changes in monetary or asset purchases policies. But the markets will be listening carefully to what Lagarde will say. Failing to address the current global trend that is tilting towards tighter policies could trigger further downside risk for the euro, especially at a time when the continent is facing a new spike in infections that could be the beginning of a new wave of the pandemic. We'll end our weekly preview by zooming in on the release of Services PMI data in the UK. This indicator is closely watched by investors, as it provides a good snapshot on the condition of sales and employment in the services sector. The services data is perhaps not as meaningful as that of manufacturing, but still very important for pound traders, with a number above 50 being positive for sterling. Despite the announcement of the reopening of the country's economy this Monday and the hawkish tone adopted by BOE officials, the pound has been under pressure, losing almost 1% to the US dollar during the previous week. This was the worst result in over a month. Sterling is facing some headwinds, with infection cases rising in the country and health officials warning of a potential return to hard times that could, at some point, force the reinstatement of restrictions on economic activity. In this scenario, any good news on the state of the services sector, the most important one in terms of impact on employment, will be welcomed by pound bulls. This is all for today. We will be back next Monday for another weekly preview. In the meantime, please go to ActivTrades.com for more market analysis. Do subscribe to our channel so we can keep you updated with the latest in the markets, and don't forget to click the like button if you enjoyed the video. Thank you very much for watching.